Chapters. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be impeccable with your word. Express your love. Impeccability of the word can be measured by a level of self-love. If you love yourself, you'll express that love in your interactions with others, and that action will do what? Will produce a like reaction. Market-wise, let's take a look at it out here. We have the Dow Industrials down 209, Nasdaq off 129, S&P's off 36. Gold contract up $7, trading at $19.64 an ounce. We have silver down 4 cents, $22.68 an ounce. Light sweet crude, flat, $75.46 a barrel. Notes and bonds. A 10-year note down 25 ticks, trading. There it goes. Trading at 107.17. The 30-year down a full point plus 25 ticks at 113.01 in King Dollar. King Dollar trading up 274 ticks. Oh, this is going to get interesting. When I just did the update, folks, we're at 314. So we're going to watch this King Dollar, man. This is going to be so cool watching it come in the next hour. So King Dollar's up 273 ticks. It is in the higher range again. But we failed the last couple days. We'll see how this shakes out in the next hour. 105, 867. Euros at 106. Yen's at 151. British pounds at 122 to 1 U.S. dollar. Let me just go over to this dollar first for a second, because we're still going tick for tick on this dollar. And I'm not, the IMF, I believe they're still talking. Yeah, see, this is the first downdraft all day since they started talking. So now let's go to the S&Ps. If this dollar doesn't hold it again, you're going to see the S&Ps basically come off this low. We've been on this low now. You can see that I get the futures up here. We've been on this low like for 50 minutes, okay? And the last time that you had any juice was at the 4366. This is coming off the lows, man. You know, I suspect we'll get to at least 4375. You know, you see the volume there. That's why I'm picking that point. When you come down, most times it's like that's the biggest volume bar. So if you can get off the bottom, you normally come up to that point, you build some cause, and it will depend on what the volumes are up at that point. And then if we do this, let's do this for a second. Just curious as to what that would be. Look at that. Yeah, see, that's only a 0.38 retracement also. So it's going to be important when we get up there. And that just that number again, 4375, folks. So 4375. And if the S&Ps come in with volume at that point, they'll bust right through it. Let's go to the NQs and take a look at the NQs. I suspect it's going to be pretty close to the same. Yeah, it is. So the NQs, the number on the NQs, we're at 15,259. We're talking there 15,305. You know, so that's 45 points higher. And if we look at the NQs, the difference with the NQs, yeah, look at this. This is pretty cool. Yeah, watch this. Look at this. We're going to bounce. The difference with the NQs, see this right here? That right there, that's where we bounced. And on the NQs, that's 30. Let me get this straight. 30,000 contracts versus versus 13. You can see how that works? You're coming into the strength from 2 days ago. You had 30,000 contracts. We start going higher. You just did I say 19? Right there. I only did 13. Yeah, there's no more sellers here, man. And watch the NQs. The NQs are going to be stronger. So the NQs more than likely will come off first. Notes and bonds. We got the 10-year right now yielding 4.622, which is that's a fast move, no doubt about that. We look at the gold contract. What we have with gold is you did reject lower price today. You're going to have lighter volume. Rejected lower price at the 1948 level, and that was basically $3 above where the real strength was. That's when we had taken off topside. Actually, that's the highs of it. So this is positive, man, big time. Look at this. So that's I was bringing this up yesterday. Yeah, it didn't even get down to that level. It didn't even get down to the second sign of strength. We had two different signs of strength on gold coming off the lows. Actually, it had three. And it got down to the second one, but it didn't get to the bottom of it. So what you have out here today, you're doing 1.8 million contracts versus 180,000 contracts versus 270,000. So once again, it's going to try to make it up. Now, this is where the guy's cool. We'll see what we get at it, if we've just set up an ABC up. We've set it up, but the real question is that as it attacks the B point, is it going to have the volume to take it out? Because this is a very minor pullback. It didn't even do a 0.382. So if you look at this could be a very large ABC structure up. 2019, well, that's a beauty, man. You're talking about 27, 37, 46 points, which would get you to, what is that, 1948? Well, 40, yeah, that's 1996. What was the last high up here? Well, I see. Last high was, is that right? Yeah, all that's going to do is get you to the highs. We go take a look at some of the higher volume equities out here. You have Tesla's down $13. We got, well, let's go inside the NDX first. We take a look at the NDX, and you got Marvell Technology, that's up at 2.8%. You got Micron up 2.3%. Warner Brothers, that's up 2%. Taken away from it, Tesla's down 6%. You got Lucid off 4.5%. You get Global Foundry off 3%. Let's go look at this one for a second. This is pretty intense. So there's a story on Bloomberg today. This was one of these sparks, folks, okay? So when you take a look at Lucid and what it was, the first owners that came in and bought this happened to be the Saudi fund. They're down 90%. But if we look at this chart, what you're going to see is that, yeah, it's down 90%. This has been a one-way move from $57 to $3.70. How's that? Stay right there, folks. Come right back. We have the Dow. The Dow Industrials right now is trading down 187. NASDAQ off 119. S&P's off 33. We'll come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 214, Nasdaq up 125, S&P's off 34. Let's go into Newmont again, because we were talking about Newmont yesterday, and I actually had forgot that Newmont actually took over Newcrest. Now, this is the problem with Newmont, okay? Number one, they paid too much for Newcrest, and that's why the market is basically punishing them. So Newcrest, that was the largest gold company in Australia. Huge gold company. I mean, they take in $4.7 billion a year. Let's see what Newmont takes in. I think they're taking $12 billion. Newmont's huge. Yeah, it's going to be 11.3 this year, 14 next year, because of Newcrest. So it's the Newcrest deal that has Newmont spinning. Now, what they did, the reason that this is what Newmont is saying, the reason that they bought Newcrest has to do with where they're doing business. And what ends up happening, Newcrest does $1.8 billion out of Australia, 1.6 out of Japan. Those are the two biggest markets. They're in China, but it's only half a billion, and no, it's not even half a billion. It's 288 million, and then Korea's 368. So that's where this punishment's coming in with, because now what's going on is that what they're hoping that they can pull off is that they can sell the mines that they don't want. Now, Newmont is the same one that ended up buying Goldcorp, folks, okay? So, we'll see how this shakes out down here. Now, the cool thing that Newmont does do, most of the times when you're selling your assets off, right, you have to get bankers to sell it off. Newmont has their own team. They have a team of 6 to 8 people that when they did sell off the assets of Goldcorp, when they bought them, they actually got a huge price for them without a banker involved. They get $2 billion for them, for the assets they didn't want. So we'll see how this shakes out in the future, but that's what Newmont's going through right now, and that's why you see that basically at lower prices. And this here, it took a while. It took a while to basically get down to that level. Oh no, look at that! I see. Interesting. No, see, you know what ended up happening? Even though this has been going on for a long time, the actual deal just got closed yesterday, November 8th. So you can. That's what's happening in that baby, you know. And you see that a lot, man. You see they overpay, you know. And what does happen there is that you can overpay now, and then all of a sudden, you know, gold keeps going, and then all of a sudden, you know, it's an underpay. Let's get over to our man, Mr. Tim Orders, we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim did an amazing workshop for us. It was a great workshop. We're going to be doing more of those workshops. Tim Ord, what's going on, brother?
All right, I sent you over some charts. So,
I have them.
Have we got time to go through them?
We definitely got time, man. Yeah.
All right. So you want we can start with chart 1.
Okay.
And it's kind of this looks at the bigger picture. This doesn't try to pick out, you know, the day of the low, I guess you might say, but does get you close to the lows in general.
Okay.
And what it is the weekly American Association of Individual Investors Bull Bear ratio, and all it is, it kind of measures what the individual investors are doing out there. If they're bearish, usually that's a bullish sign. If they're bullish, it's usually a bearish sign. And today, actually, I circled in red there where they were actually yesterday, which is 0.55, and anything below 0.75, you're looking at a low. Now that's the market's gone up. This is yesterday's reading, but the market's gone up for over a week. It's not up today, but it was straight up. And these guys remain, you know, on the bearish side of things.
Right.
So that bodes well for the bigger picture. Is what I'm saying. Not to say we're going to have some short-term pullbacks. Most likely we will at some point, and maybe starting one right now. I don't know. But on the bigger picture, you know, over the next several months, anyhow, this is a bullish sign.
Yes.
So that's kind of the bigger picture. Now, let's flip to chart 2.
Okay.
And the top window, I use this ARMS index a lot. The trend or ARMS, they're both the same thing. Richard Arms came up with, I think, back in the 1970s, whatever. But it measures volume, and it measures up volume and down volume, and also measures advance and declines. And it combines all into a ratio. Yeah, it's just basically it's advancing issues over declining issues divided by up volume divided by down volume. And you do all those ratios and you come out with a number. One is basically everything's neutral. You got as much up volume as down volume. On advancing issues, declining issues doesn't say much. But when you start getting volume on the down issues, this ratio starts to rise. And you would think that would be bearish. But it's really not. It's actually bullish. And the more people rely on the sell side on their declining stocks, the more bullish that becomes. And so when you get this ratio on a 10-day average, so that's like 2 weeks of trading. This is a 10 trading day thing.
Yes.
I use a 10-day. And you get up around 1.2, you got a lot of down volume on a lot of down stocks in general. And that turns out to be a bullish sign. And all that shaded pink areas are times when that ratio was above 1.2. So currently we had, going back here, looks like about the October, we had a bunch of had a reading near 1.2. Currently we're at 1.18. It's more bullish than bearish.
Yeah, because yesterday,
with the market flying up.
Yeah, yesterday. I mean, here, look at this, folks. Okay, because this is a big divergence. Yesterday we have a closing one of 1.52, man, and the market, was up slightly. It's like, okay, really?
Yeah. And actually, the day before that was 1.23. The day before that, this is 3 days ago, 1.28.
Yep.
So as the market was going up, people are kind of selling it here.
Right.
So. So let's get to the gist of what we're talking about. I sent you another chart 3, and what I'm going to do is just flip to chart 4.
Oh, chart 4? Sorry, 3, 4. Okay, I got 4. Yep.
Yeah, 4. It's kind of here's where we really are. If you look at the back in the April-May period, it's shaded in light blue, and the market was straight. We covered this quite a few different times, but that April-May period was bumping against the February highs. And we talked on your show. This is the BVIX VIX ratio, and there's two. I look at it both ways. There's a VIX to VVIX ratio, which goes against the trend. In other words, when that ratio is going up, the market's going down. Well, this one kind of just reverses it. So when the S&Ps are going up, I hear the music.
Awesome. Just stay right there, folks. Tim and I are going to be coming right back. We have the Dow Industrials down 220, NASDAQ off 116, S&Ps are up 34. Tim and I come right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Tim Moore, Tom O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow. The Dow Industrials right now down 228. NASDAQ's off 126. We have the S&Ps off 37. We're talking with our man, Mr. Tim Wood. And I'm on the third chart that you sent, Tim, which is the SPY over the.
We're doing chart number 4.
Okay, so chart number 4 is the TLT over the VIX. Is that right?
That'd be chart 5.
5. Okay. Oh, I see. So I thought you wanted to replace. You didn't want me to replace one. You just 1 second. Hold on.
Yeah. Actually, I just skipped that chart, which is chart 3. We can go over that chart. The new chart. I had a chart 3 and I updated it and sent you another one, chart 3.
Yeah, I have that one up. Let's do that one first, and we'll go back.
Okay, and that's VIX to VVIX ratio.
Okay. Yes, it is. I believe. 1 second. This one says SPY. Hold on 1 second, man.
Be up in the top right, top left corner.
Oh yeah. No, that's what it is. Yes, that's what it is. Yes.
All right. Okay. That's chart 3. Let's flip to chart 4.
Okay. I'm going to put.
Just.
That's the daily. That's the TLT, and the VVIX, right?
No, it'd be a VIX. That'd be. That's chart 5. Okay.
Okay. Hold on. Just give me 1 second. 1 second. Sorry about this, folks. So I'll get this. 1 second. Hold on. Because there's only one chart that I didn't put up, but I misunderstood.
Okay.
We weren't replacing it. Just give me 1 second. I'll get this right now. Okay. Where'd you go, Jacob? Oh, where's your hat? Oh my God, I can't find his hat now. Jacob, if you hear me, can we send it over again? Okay. Let's do the TLT, the VVIX first. And then
All right. Okay. Let's do that.
Okay.
Okay. That one. Now this is okay. Yeah, the middle window is the daily TLT, which is the bond market, over the VVIX, which is the VIX of the VIX.
Yes.
And you wouldn't think this would draw any conclusions of anything worthwhile, but it really does. And there's a divergence process and there's an acceleration process. And we talked about, actually, we had this similar chart on our webinar on Tuesday.
Yes.
And what I want to show you, the top window is the rate of change, the 10-period rate of change for the tilt VVIX. And the second window down from the top is the RSI 10. In other words, a 2-week RSI. And I pointed out the divergence, but also I pointed out the acceleration. So when this ratio accelerates to the downside, and both those ROCs and RSIs gets oversold, you're looking at a short-term low, and all those red dotted lines across the chart are when that happens. It can also work the other way. When there's acceleration to the upside, there's also a consolidation or a reversal, and that happens when the RSI 10 and ROC 10 reach above, RSI be above 70, and the rate of change would be above actually 30, and that's the blue lines across the chart.
I see that.
Well, so yesterday we reached about 40. So that ratio's gone up too fast, too quick. And so it's due for a rest, as it means a top. Sometimes it means consolidation. If you look at the April period of 2023, I got circled in blue on the bottom chart there.
I see that, okay.
Yeah, it just went sideways. And the other two times they had minor pullbacks, but neither one hit new lows or anything. It kind of just stalled the rally. So I'm doom thinking we've gone up too fast. What it's going to do next is probably also we've been up 8 days in a row going into yesterday. Up 8 days in a row, predict the market will be higher 100% of the time. This is over the last 5 years, within 5 days, and the average gain is 0.7. It's about the same statistics as up 7 days in a row. So even though there could be a minor pullback here, with such a momentum up, in other words, 5, 6, 7 days up in a row, or 8 days in our case, the market just doesn't top and go back down. It maybe has a mild consolidation, but it goes up again. So will next week be a down week? Yeah, maybe the first part of next week, but probably towards the end of next week, it's probably going to go up.
Now, Tim, I know. I was going to ask you this question. I was going to ask this question because I was well aware from when you were on Tuesday explaining the deal that if you're up 7 or 8 days, it's 100% of 5 days later. Is that 5 trading days, Tim, or just days in general? Trading days.
Yeah,
okay, cool.
That's 5 trading days. So, yesterday, so that would predict next Thursday would be a higher high. So can you have a pullback zone? Now, if you're thinking about puts in here, it's probably a bad idea, I'll put it that way.
Right. Right.
So, but I guess I don't know how the pullback's going to work. If you get a 10-day trend up around close to 1.2, that's not an ideal short period. If you're down around 0.8, yeah, maybe, but not up around 1.2. And so don't get bearish. But did you get that other chart?
I have it up right now. Yes, I do. That's the VVIX/VIX. That's what I have up. Okay.
All right. Okay. This chart, if you look at the first light blue area,
okay,
that's at time of April-May time period, tested the February high as the market went sideways.
Yes.
And we talked on your radio. I'm thinking, we're going to go higher. The reason why higher is because of this ratio, the VVIX to VIX ratio. It was breaking out to new highs. And so currently, the left-hand blue area, currently we're testing the October highs right now on the S&Ps. And if you notice, that ratio is making higher highs. Same situation we had back in the April-May period, testing the February highs.
I see that.
So if there's a mild consolidation coming, we're probably going to start breaking up again. So I don't know how big the consolidation is, but in my opinion, it should be pretty minor according to the 8-day rule, 8 days up in a row or 7 days up in a row. And you got a trend of 1.18, which neither one is bearish, plus a bullish divergence on the VVIX-VIX ratio. So, don't know what next week. Plus, there's another statistic, too. Next week is the 10th weakest week of the year.
Is it?
10th. Yeah.
Man, you get so many statistics. It's so cool. I love it.
Yeah. I should get a life or something, but I do this instead.
Well, so watch this, folks. This is kind of intriguing. It was really intriguing because, if we have this S&P up 7 or 8 days in a row, you get 100% of 5 days later, we're talking like next Wednesday to Thursday. So picture, it'd be kind of cool if you did have some sort of a pullback, and then all of a sudden, for some reason, you get an expansion, topside. I mean, as soon as Powell was talking at 2 o'clock today, Tim, in the IMF, and he was much more hawkish than he was even when the Fed basically came out with their, statement last week. Here, just stay right there, Tim. Stay right there, folks. We're going to short break. Tim and I are going to be coming right back. We have the Dow down 236, NASDAQ off 136, S&P's off 39. Tim and I come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Well, welcome back, folks. Tom O'Brien, we do appreciate you growling and prowling with us. We have the Dow. The Dow's trading down 240, Nasdaq off 140, S&Ps are off 39. And the chart that we're looking at right now is the VVIX/VIX. So,
okay, yeah. I just sent you another chart on gold.
Okay.
Did Jacob get it?
Yep. Let's see. We will get that. We will get that. Beautiful. 1, 2, 3. Okay. Let's see. I'll get them. Yep. Good. Go ahead.
Inflation deflation ratio.
Yep. Okay. That's all right. Here. 1 second. Go ahead. You can start talking about it. He'll get it right over to me. All right.
All right. Yeah, I sent it just a minute ago.
Okay.
I thought this was worth covering because this is a pretty rare. It's Martin Pring's inflation deflation ratio. Martin Pring's been around longer than I have.
Yeah, a long time.
Both of us. So he's anyhow. He came up with this ratio. I actually don't know what the internals are. But over time, his work. This chart goes back to mid-2015, and I marked the times. This is on a weekly time frame. It's on a weekly time frame, and I just used an RSI for it, and that was it. And it did extremely well, picking out the bottoms, and it actually does pretty well on the tops too. But it does really well at the bottoms, and you don't get many signals on this chart. But when you do, it's worked really good. It picked out. Have you got the chart up yet?
Not yet.
Okay.
Go ahead. That's all right. Just keep talking.
But anyhow, the second window up from the bottom. So when you get to it, I thought.
I got it.
The last low
okay,
we
cool.
had
1 second. I got it. There we go. I got it, Tim. Go ahead.
Right. The last low in August 2022, I have other indicators that said that was an important low.
Yes.
And I said at one point, I don't think that low is ever going to, or it's be years before that low is going to be broken. And the market rallied up and has been consolidating since about April, May of this year. And we're into a kind of a sideways pattern. And we had a sign of strength over here a few weeks ago. Then,
yes.
The last couple of weeks, the market's just been consolidating. Well, in that consolidation, the RSI, this is on the weekly time frame. So these, so you have to have quite a bit of pressure all the way through the week, even though price damage was really not much in GDX or XAU. That inflation deflation ratio on the weekly time frame went through the floor. And that's really a good thing if you're bullish, because if you look at the RSI, it has to get below 30. And as of last week, it was 28.89. So it's below 30 right now. To get the signal, you have to close back above 30. But usually 30 is pretty much where it turns around at. So I don't know if we're going to rally this week or not, but if it does, these signals, if you look back, they come maybe once a year at most.
Okay.
So it's a rare signal. Last time we had a signal was August 2022, which was correct. The market went up. And now we got another signal. Now we're in November of 2023.
I see.
We're getting in the process of getting a signal. We need to close above 30 now to have that triggered. But these signals are multi-month signals. They're not like a week or two. They're multi-month. And sometimes they can, last a long time. The one in 2019, went straight up for about 6 months. It kind of got back and forth. But anyhow, the 2016 went straight up for.
That was a beauty. That was, that's when
lining up.
That's when the
G. Got other signal type things that are suggesting something's close to happening here. So.
Yeah, because if you take a look at this, folks, look at this for a second. The GDX went from 17 to 45. That's the 2016 one. That was a beautiful run, man. Yeah.
Yeah.
That's the last big run we got, really. Yeah, it is the last big run we got, right?
Yeah, so we got that going on right now.
So I guess, let me ask you this. What we don't know inside of this signal, what you just said, is that how does he get the correlation of the inflation-deflation deal, right? We just know that this is how this works, right? Is that correct?
Right, that's how it works. Yeah, I probably should look up the definition, what he's got in there. I don't know.
No, that's all right. I was just curious, right?
Something with it.
Right,
but, but it's like anything, it's acceleration. A lot of these signals are generated through acceleration of these ratios and stuff like that.
Yes.
And that's what the trading public is missing. They're all looking at moving averages or trend lines up and down stuff. The true meaning of the market, a lot of times, if it gets accelerated in one direction too far, it's going to snap back to a norm.
Yes.
And that's what this inflation-deflation ratio is all about. It's just gone down too fast, too quick. It's going to snap back to a norm. And so it's kind of opened my eyes of how to look at the markets.
I agree.
Accelerations and ratios and stuff. The trend lines is kind of like the old new. It's the old theory. This is a step forward, I think. Price and volume is still very important, but the acceleration of the ratios and stuff carries a bigger story, I think, what the market's going to do.
No, I agree. I agree, Tim. Particularly because, see, the ratios that you're actually using are very important because, like when you're talking the TLT, well, the bond market is literally, who knows, 100 times bigger than the stock market. So you get a correlation there inside, and then you have the fair gauge on the other side. So I can see that in a second, man. They're all relevant because there's not just one thing, that is moving markets. I mean, that's the reality. I mean, you have all these different things that are moving markets. Particularly, it's just a movement of money, right? And those ratios are showing. Bottom line is that when there's more fear, when there's more greed, because something to remember, folks, okay, these ratios work on the upside also. This is what's so cool about this. It's not a one-way scene, which, is very important, because there's plenty of things that can work on a one-way deal. But, when you get both sides of the correlation, it's awesome because it's like, okay, when are you supposed to get out? Well, we know that you get out in July. Why you get out in July? Because that ratio was basically saying, hey, you better get out, man, because pretty soon we're going to be going down. And pretty soon was basically about 5 to 10 trading days later, folks. Okay, so, yeah.
Yeah. Yeah, well, matter of fact, the last chart, chart 5 on our discussion today was that TLT to VVIX ratio getting up plus 40. And that ratio hit there yesterday. So what the market do today? Goes down. So, I mean, it gets pretty close to wherever you need to do, you know. So, I mean, it's how far it's going down. I don't think it's going to go down much. There's going to be a little scare here. And, maybe we fill a gap or something, which, if you look at the SPYs, there is some gaps below it.
Oh, hey, listen, Matt, I got questions to him about a 3-gap play. Now, wouldn't that be sweet?
Actually, we did have a 3. Yeah, that means you go all the way back down to 410.
So, folks, I'll just do this quick.
maybe later.
Tim and I have traded 3-gap plays many times when the OEX was there. And these are something else, man. I mean, if we get lucky enough for that, Tim, it's going to be pretty wild, man.
Yep.
Well, listen, Tim, it's always a pleasure. You have a great weekend, a safe weekend, and we look forward to speaking to you on Tuesday.
All right. Love you, man.
Love you, man. And I'll go through this 3-gap play as soon as we come back, folks.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Tim and I were just talking about a 3-gap play. So this is how this works, folks. So we had 3 gaps on the way up. You know, bottom line is that you had a couple signs of strength, right? So you get one small one, a larger one, and a larger one, right? So what happens with a 3-gap play is this, is that you get to the high, then you come back and you fill all of them. You come all the way right back down, okay? Now, as long as you do that with lighter volume, okay, and what's happening here, we have lighter volume out here today. You're going into 102 million shares and you get 69. As long as you do that with lighter volume, what you have is that at that point there, at the bottom, that's the buy. Because the way the gaps work, when you get a 3-gap play like that, the 3-gap play is the trend is higher. If we had 3-gap plays lower, that's how that works. And they're phenomenal plays, you know, when you can get it right. Because what ends up happening, 2 different things end up happening. Just as we went up, if it's going to be a 3-gap play, you're going to fill these very quickly. That's what I've seen these lay out here for like 2.5 weeks at the highs before they do it. But when they do it, it's phenomenal because they come back down, and when Tim and I were playing these a lot, because there were a lot of these in the 90s, we were playing it in the option market, because if it come back down, then all of a sudden it's, oh my God, your risk is very low versus your reward. Because what ends up happening, all you have to do is put your stop underneath the last gap, and you go from there. But that's how a 3-gap play works. The biggest thing to get out of that is that whatever way that you actually gap, that's where the trend is going. As long as you do pull back, and you're pulling back with lighter volume, that gives you the verification that this market still wants higher price. You get a fast and furious on the way down. You get price destruction without volume, folks, is one of the best buys out here. Okay, they're very hard to buy. Don't get me wrong, because when you get fast price destruction, it's like, oh man, what's going on? Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Look at him, folks.